Markets were moving today on news that Israel attacked Iran. Now Iran also is retaliating. Let's go to Gary Schlossberg, global strategist at Wells Fargo Investment Institute. Thanks for joining us today.
Thank you. Thanks for having me.
Oil spiked, of course, on this news, but so far there doesn't seem to be evidence that Iran's oil supply has been affected. Do you think that the price of oil will settle back down?
Well, a lot depends on the ultimate fallout, what sort of disruption we may see to oil flows in the Middle East. We're certainly encouraged so far that the fallout will be limited, but clearly we're still early in the crisis, and we'll just have to see what impact it has on, for example, the flow of oil through the Strait of Hormuz and elsewhere on the market in general.
What more did you notice as far as a reaction goes when you were watching today?
Muted overall, I think. Certainly a move out of risk assets, the usual move into safe haven assets. Seemed like there was more of a move into gold and Swiss francs than there was into dollars, even though the so-called Dixie did move up in the foreign exchange markets. That may be saying something as well. But all in all, fairly predictable, but again, fairly muted, just given the uncertainty as to just how this will play out.
Do you then anticipate more response, Gary, if this drags on for a few days or a week?
Well, it really depends on what the ultimate, how this actually plays out over the next couple of days. Certainly, we're monitoring the situation, monitoring the flow of oil, and that, I think, in this part of the world, of course, will be determining just how things play out economically. Historically, geopolitical disturbances have a fairly short-lived impact on markets across the board, except when they have an economic impact, such as a big spike in oil that proves to be enduring. And we're just not sure how this is going to play out just yet. We think the move at this point is into quality assets, some of the areas, sectors that we've been favoring for some time. But again, fairly early in the game.
Investors have had a lot to worry about so far this year. The first 6 months, they've had the tariffs on and off. Now they've got what's going on in the Middle East. How do those two stack up as concerns for investors?
Well, clearly, the situation we've seen in the last 24 hours still very uncertain. With tariffs, the potential disruption to trade. So far, at least, the market has absorbed it well. We haven't seen the full impact of those tariff increases fully wash ashore, at least in our view. We think that will come sometime during the summer months. So what happens in the oil markets in that context becomes all the more critical.
What are you telling investors then in the short term with the geopolitical moves in the Middle East? Just sort of hang on and let's see what comes of this?
Well, we think it really dovetails with our recommendations for quite some time now. And given the added uncertainties out there, the focus should be on quality, stable earnings, strong balance sheets, just given the kind of economic outlook that we were anticipating over the next 6 to 8 months. The focus, we did favor energy, and clearly that is coming on quite a bit, financial services, and the longer-term outlook, the longer-term positives favoring communication services and infotech.
Okay, so I just want to get timeline straight. At the start of the year, everybody was in a certain situation. Donald Trump was coming into office. Things started to fluctuate very quickly after that. When did you decide, or has this always been the idea to invest in something long-term that's going to be stable, like financials, as opposed to something like tech, which we know goes up and down quite quickly?
We have been focusing on quality for quite some time. I think coming into 2025, we felt that with the economy poised for a recovery late this year, and now I think our timing is even later than anticipated, we would begin to take a closer look at some of the more economically sensitive sectors of the market. And that really is in financial services. That is the representative there. We had been favoring energy for quite some time. And of course, energy had been a lagging sector until recently, and now it is coming into focus as well. But generally, the backdrop for a longer-term investor has been on quality, has been on the U.S. market, just given the inherent strengths here, the liquidity in larger cap stocks in a balanced portfolio. And more recently, we've also favored utilities, just given our outlook.
You mentioned communications, an interest in communication sort of later in the year. What has pulled your focus there?
Well, communication services was really more of a longer-term view. I would say short-term was really more financial services as a cyclical play. But communication services certainly benefiting from artificial intelligence, the digitalization of the economy, and so forth. This is a growth sector along with infotech that we have been favoring and continue to favor just in terms of the longer term strengths.
You've mentioned financials, you mentioned communication. So do you tend to stay away from some of those volatile tech stocks?
Well, some of the smaller ones, perhaps. The larger tech stocks that have the balance sheet strength, the earnings stability, really fall into that broader category of focusing on quality stocks, just given the uncertainties out there up front, and then benefiting from some of the longer term potential that we see for that sector.